Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Okay, so first up we're going to take a look at MULE. Okay, so this stock had a huge move today. It actually made a new 52-week high and actually a new all-time high. So this was a monster move, closed up 27% on the day. RSI is at 84 and Fasto's at 96, so it is frothy. You know, you have plus DI pushing here, really elevated levels. Yeah, so yeah, that's what happens when you get a breakout. This is on what we call a blue sky breakout. This is uncharted territory. There's no overhead resistance from this level, and so yeah, the key now is to follow the intraday charts. With today's candle pushing well above the upper Bollinger Band, the next you can see the upper Bollinger Band is down here at 38. If the candles do work into the bands, EMA4 down here at 36 will be the key support level to hold. Keep in mind, this is pushing higher, or did push higher in after hours trading on good volume. I think it could have been up another 5% or so. So yeah, it looks like there's a possibility of another gap up open tomorrow. And so yeah, if you look here at for the options traders, you can see here the call the MULE April 20th 40 call options here. It delivered huge gains, up 1,800%. You know, so yeah, this was a really sweet move for people that are trading options. So congrats on that. If you look here at the weekly chart, you can see that it's been pushing super hard this week. This was the start of trading back in 2017 in March, and so as you can see, there's no overhead resistance from this level. It's pushing to the highest level all time. The candles do push back into the bands. You can see down here EMA4 at 36 is the key level to hold. As long as the candles are riding EMA4 support, the uptrend should continue. Just keep in mind, sometimes when the candles push well above the upper Bollinger Band, they get ahead of themselves and the candles work back towards the bands. Okay, let's look at TWMJF. This is canopy growth. So yeah, I'm showing you this chart because, you know, it was down 2% today, but there's a bullish technical development going on, a couple of them actually. So there's this symmetrical triangle pattern. You can see the descending resistance, and you can see how this turned into really big resistance through here. And so what happened is there was a close yesterday above the red descending resistance line. You can see here's the you know, you have the ascending support, and so so this forms the symmetrical triangle. And then yesterday the close above the red line, the red descending resistance line, and above the green line here, which is the 50-day simple moving average at 24.96. That's signaling more upside potential. So if canopy growth can stay above 25, you know, hold that 25 support level, this could be the move that everybody's looking for it to push higher. You know, it's closed above the 50-day simple moving average now. This is the third time. I mean, you could go back here, and this could be the fourth since it's been below. And so it's been working on turning that level into support as it's slowly been climbing higher. And so once that level finally holds, that's when it could break out. And so keep an eye on it. 27.50 or so is the next key level to break above. If it pulls back below the 50-day simple moving average, that'll signal more consolidation. Okay, take a look at ACBFF. This is Aurora Cannabis, and so this is the you know, another top marijuana company, Canadian company. And so if you look here at Fasto, it's all the way down at 2. And so previous times when Fasto's hit this level, you could see down here, you know, a technical bounce followed. So you hit 2 and then it bounced, and then down here, you know, it hit 2 on this red candle, and then a rally followed. So here we are again at 2. Is history going to repeat and ACBF going to bounce off this level? Well, look at the candles. They've walked this down on 6 red candles in a row. 5 days down and rebound is a good setup. So 6 in a row, I mean, this could be, you know, have to look back, but you know, you have to go off of this chart to find 6 red candles in a row for Aurora Cannabis. Okay, so this is a pullback, and look at the very light volume that they walked it down on. Look at the big volume over here. You know, this is walked down on relatively light volume. It's hitting a key support level here, the closing price on the 27th of February. Look for a possible bounce off this lower Bollinger Band. band at 775. So look for a possible technical bounce off of 775. If it drops below that, it should definitely, I mean, I would be super surprised if it didn't bounce off the 100-day simple moving average at 717. If it hits that level, I would think that would definitely be a technical load level. And so if you want to play it safe, the candles are riding EMA 4, resistance lower, that's at 822. So you could just wait for the close above EMA 4, and that would be the signal that the chart is heating up. If you do that, you might miss the low entry point. Keep that in mind. We recommend using the 15-minute chart to time your entry. The candles need be above both the middle Bollinger Band and the 50 simple moving average on the 15-minute chart for it to be confirmed that it is actually bullish, and then the candles need to stay above both levels. Okay, let's look at PRPO. This was the big penny stock winner today. It was up, I believe, like 130% today, but it only closed up 88%. That is a red flag. It has RSI at 62, so it has room to run, and Fasto is way down here at 34 because of this long upper wick. Check out the giant upper wick on the candle. It hit 175 and pulled all the way back down here to that at 90 level. Yeah, that was just a nasty pullback. It ended up closing below the 100-day simple moving average at 111. It needs to get back above that level to head higher. If the 100-day simple moving average turns into resistance, that would signal consolidation. You want to keep an eye on this green line tomorrow. That's the 50-day simple moving average. If it drops below 88, the candles could work back into the bands. The risk is that it drops down here to EMA 4 at 67 and tests the middle Bollinger Band down there at 60. It just broke above those levels, so it might have to confirm that they are support before it heads higher. This is the first close above the middle Bollinger Band since way back here in January, and so this is signaling the possible reversal. But the red flag is this long upper wick. Well, why is that such a red flag? Well, look down here at accumulation distribution and shaken money flow. Check out how accumulation distribution, like I always say, it fell off a cliff, and then you have a giant spike down on the shaken money flow histogram. The share price was up nearly 90% today on monster volume, right? But you have a giant spike down in accumulation distribution and shaken money flow, and this is a penny stock. And then look at the average daily volume. It's pretty anemic. This all tells you that they used today to dump shares. This is dilution. This is more than likely going to drop below that 50-day simple moving average. If it gets above, then that's great. You got lucky, but more than likely the signal is to, when you see this pattern form intraday, is to lock in gains and head to the sidelines. Okay, so yeah, just keep that in mind. If you look at the 15-minute chart for PRPO, you can see how it was a pump and dump, or they sold off at the open. You can see they ran it up, and then the big volume was at the open. Check out the gap up between the first two candles. When you get a gap on an intraday chart, like a 15-minute chart, the market makers are going to pull it back and fill it. People got way too overzealous here trying to buy, and the market makers totally crushed them and pulled it back. It came down and it consolidated sideways. It's now below the middle Bollinger Band. It has to get above 94 to head higher. If it gets above 94 and then breaks that $1 level, then it will be back in play. That would signal that it wants to push higher. That would put this 100-day simple moving average on deck. Now, if it drops below 90, you can see that was the support level today. That would be a red flag, and the downside risk is it drops to the 50 simple moving average at 76. The thing is that we don't create the chart patterns. We only follow them, and so if you have discipline and you take precaution and lock in gains and head to the sidelines, or just avoid plays that form the long upper wick like this, in the long run, it will save you more times than not. Okay, let's look at CEI. Okay, this was a big move today, so congrats everybody. I know we had a lot of people in the chat that were trading this, and so yeah, good job. That was nice. It closed above EMA 4. This had a recent reverse split. Okay, so it reverse split back here, I think either here or right here, but you could see it might have been the 5th, and then you could see after the reverse split, it had the gap down, and then they just walked this thing down all the way. And so yeah, that's not really what you want to see after a reverse split. Reverse splits when they can hold support and then break out above the reverse split level, that's when you've got something cooking. But this is the opposite. This looks like they were using the reverse split to dump more shares. You can see they had a lot of volume here on the pullback. And so, but the dead cat bounces happen. I mean, look at all those red candles in a row, or red volume bars in a row. Look at all the red candles. This was due for this is a classic dead cat bounce. But don't be fooled. This is more than likely just a short cover rally. Okay, so in order for CEI to remain in play, it has to stay above EMAs 4 and 8. The reason why they do the reverse split is because they have bad financing and they have to keep dumping shares to keep them afloat. I mean, that's more than likely the reason. And so if this drops below EMA 8 at 107, that's going to be a red flag. And then if it drops below EMA 4 at 97, it will no longer be in play. Look what happens when it's below EMA 4. It's a major risk to hold long. You only want to be holding below EMA 4 if you're short. Once it closes above, then that's the short cover rally. And then if it can get above EMA 13 at 128, then the next resistance level would be the middle Bollinger Band. Now, if let's say it does and breaks above the EMA 13 and it runs up to that middle Bollinger Band and closes above, then what we'd be talking about is up here the gap between low of day on this candle and high of day on the 5th. And so we were talking about running up to this level to possibly fill the gap. First things first, though, it has to stay above EMAs 4 and 8 and break EMA 13. Okay, let's look at the 15-minute chart for CEI, and this is why I'm not convinced that it's going to be able to break out higher. Our strategy is to lock in gains at this 300-day simple or 300 simple moving average on the 15-minute chart. If resistance fails to break after closing above, intraday, and that's exactly what happened here. You can see this started off nicely, and that was the good move. That this busted above the middle Bollinger Band and the 50 simple moving average on a volume spike, and it was holding those levels. It's holding the green line and the dotted purple line. So that was the signal to load. So good job, everybody. It did get above the 100 simple moving average, and so that yellow line, and that signaled it was ready to go, and then they pushed it really hard here, and yeah, it got above the blue line, the 300 simple moving average temporarily, but it pulled back below. So tomorrow going forward, above 113 signals, okay, keep riding long, and then it has to break this high close here at about 121 or so. But if it fails to get above 113, that's going to signal downside risk. The downside risk is it drops back down to test the 200 simple moving average in that $1 level. So there was really good volume into the close. We just have to see whether or not they're going to try to take this thing higher, or if they're going to do the typical thing and pull it back. Everything, in my opinion, is riding on this blue line here. So bullish stocks turn the 300 simple moving average on the 15-minute chart into support, and then that's when they run up to that middle Bollinger Band and get the reversal going. If you get a rally from down here below the middle Bollinger Band up to the top, which is the 300 simple moving average, and it fails to turn that level into support, that signals that this run is done and that it's going to pull back and look for a reload lower. Okay, let's look at ENRJ. Okay, so yeah, this was one of the big energy small caps that we've been following, or micro caps, whatever you want to call it, one of these penny stocks. And yeah, it had the really sweet move yesterday. We were on it a couple of weeks ago when it got above the middle Bollinger Band, and then it turned the 50-day simple moving average into support, the green line, and then yesterday it had the big move above the 100 and 200-day simple moving average, and then it hit that 300 simple moving average and noticed the long upper wick, and it closed below, and so this CEI could make this similar kind of move that we'll see what happens. Okay, we'll see. We'll just stick to this chart, but what happened today for ENRJ is it had the gap up open. And then notice it ran all the way back up to that near the high of day from the day before and pulled back. It formed that long upper wick again. And so what you had, it was another spike down in accumulation distribution. Look how far it's fallen in the last 2 trading days. And then check out how CMF had even a bigger spike down today on a bigger a red histogram spike. Notice how it's hitting these low levels from February. So they're really unloading some shares here. And so yeah, the candlestick that formed today with the spinning top, it signals indecision. You have the long upper wick and then the lower wick looks like it's twice as long as this real candle body. And so basically what this candlestick pattern is telling you is the candles are likely to work back into the bands. And so the 300-day simple moving average here at 31 is the key level to hold. If it drops below that, then EMA 4 at 28 will be the next target. That's what usually happens when the candles close well above the upper Bollinger Band. You know, you have this candle floating up here, and then the upper Bollinger Band's way down here at 29. And so a lot of times when that happens, the candles will work into the bands. It may not, you know, the gap is filled by the wicks, and so, you know, we'll see what happens. If it does work back into the bands, EMA 4 at 28 is the key level to hold. Okay, if you look at the ENRJ 15-minute chart, you can see today, you know, yesterday it broke down into the close, and it closed below the middle Bollinger Band, the dotted purple line, but it stayed above the 50 simple moving average. Today, you know, it broke down, you know, around 130 or so below the middle Bollinger Band, and then it came down and it broke that 50 simple moving average. It did close back above. Okay, so going forward tomorrow, 35 is the big level. If ENRJ can stay above 35, then 40 will be the next target and key level to break. That's the middle Bollinger Band. If it drops below 35, that's going to be a red flag, and that could signal that it could pull back. And the downside risk is it drops down to this 100 simple moving average at 27. Okay, let's look at PED. Okay, this is one to keep an eye on. I just showed you a couple of energy sector penny stocks, and so this one is trying to heat up. You can see RSI is at 54. Fasto needs to get above 50. It had this crossover. Look how the green line plus DI crossed above the red line minus DI and above the black line 80X, so it's trying to break out. And so you have this nice move above the gold line, which is the 100-day simple moving average, currently at 32. And so that level needs to turn into support. If that level holds, you know, this could head higher. It closed back today also above that 50-day simple moving average at 32 and the middle Bollinger Band at 31. So yeah, basically that 31 to 32 level was huge. EMAs 4, 8, and 13 are at those levels as well. So going forward, if PED stays above 32, that's going to be bullish. If it drops below 32, it will no longer be in play. But if it holds 32, it might get going. And then if you can see this 34 level was this close, the high close from March. That will be a big level to break. And then basically, ultimately, you got this December high close up here at 38. So the two levels are 34, 38. Get above 38, and it has a chance to run up here into the 40s. You have the 200-day simple moving average all the way up here at 46. So, you know, as you can see, this has been in this sideways channel. You know, it's in the sideways channel, it's in the middle of the channel, you know, with 38 being the top and down here at 28 being the bottom. And so at 33, you know, you could get some decent percentage gains just on a run back up to 38. And then the bonus would be if it broke above and then ran to 46. Now, like I said, drop below 32 signals more consolidation and not ready to go. Okay, let's look at CASI. This is another one that closed above resistance today. And so keep an eye on it. It closed above the middle Bollinger Band. Well, it closed above the 100-day simple moving average, the middle Bollinger Band, and the 50-day simple moving average, and also EMAs 4, 8, and 13. And so I know it's kind of hard to see in this chart, but the candles were riding the pink line lower, and so they had been riding below EMA 4 for multiple weeks. And then today there was a close above, you know, all these major resistance levels. So to keep it simple, if it can stay above 372, the 50-day simple moving average, it's in play. And then the key level to break is going to be this high close from February, the first trading day in February, which is just about 430 or so. And so if you see a close above 430, then it could break out higher. This was a really strong move today. And so keep an eye on CASI. We'll see if it'll follow through. Another one to keep an eye on is BPMX. Okay, so this one is trying to heat back up. You know, it has RSI at 62 and Fasto at 54, so it has room to run until overbought levels. It had a pullback. Okay, so there was 5 red candles in a row, and then today there was a gap up open. The red flag is there's a small unfilled gap between high of day yesterday and low of day today. If this stalls out, it could drop down to this middle Bollinger Band down to 27 to fill the gap. A drop to 27 would fill the gap. As long as the middle Bollinger Band and the 200-day simple moving average are holding, you know, it stays above 27, then this uptrend's still intact. If it drops below 27, that would be downside risk, putting the 50-day simple moving average at 19.5 on deck. Now if they can stay above, and it's back above EMAs 4, 8, and 13, that's the pink, orange, and lime lines. If it can stay above that level, stay above 30, then the big level to break is up here at the 300-day simple moving average. That's the blue line. You know, you also have the high close here from the 6th of March as another key level to break. And so basically, if it can get above this 34 to 36 level, you know, once there's a close above that 300-day simple moving average, that should be the signal that it wants to head higher. Fail to break that level, you know, that signal is a temporary top. Right now, the candles are wedged between 200-day simple moving average support support, which is the bottom, and 300-day simple moving average resistance, which is the top. You know, but and the numbers are 26, you know, basically 26.5 to 35.5, which is some pretty nice percentage gains just in this channel if you bought at the bottom and then sell at the top. Okay, let's look at TRXC. Okay, so this closed up 14% today. You can see here RSI is at 56, FASTO's at 56, so it has room to run. You have the bullish crossover in ADX, the green line crossed the red line to the upside. That's a signal that the bulls are starting to take control. This is another one of those, you know, closed above resistance plays. It closed above the EMAs 4, 8, and 13, above the 50-day simple moving average, the green line, and above the dotted purple line, the middle Bollinger Band. And so if it can stay above 180, that would be bullish. Okay, so but if it holds 180, it's going to be in play. And then what it needs to do is break this descending resistance line, okay, which is basically the top of this channel. You can see you have descending resistance and then descending support, you know, in this multi-month channel, downtrending channel. And so if it can break above the 100-day simple moving average, it's hard to see here, but it's lined up with the upper Bollinger Band, basically $2. If it breaks above $2, that 205 level, that would be very bullish. That would signal, okay, it's heading higher. So watch TRXC for above 2. Now, if it runs up to $2 and stalls out, that's going to be a temporary top. It has to break the closing price on March 5th to head higher. A close above will, you know, more than likely be the signal that it wants to keep pushing higher. So keep an eye on it. It's trying to heat up. And then one last one to keep an eye on is GEN, another healthcare sector stock. You know, we've had lots of penny stocks in the healthcare sector that have been running, a lot of biotech stocks, and you've got this close now that I just talked about in the last one, a close above high close horizontal resistance. GEN had that happen today. It closed above the high close level, which is the top of this white candle from the first week of March, and then it's the close above today. That does signal it wants to head higher. You know, this has been resistance. It closed above. If it can stay above this 162 level or so, that would signal it wants to push higher. Now the next target's going to be that 300-day simple moving average at 177. It needs to close above that level and turn it into support, similar to over here when it broke the 200-day simple moving average, and over here when it broke the 100-day simple moving average. You know, and then here's where it broke the 50. Okay, so now it's lined up to hit that 300. Is it going to be like the 50 here and hit it and stall out, or is it going to push through like it did on the 100 and 200? Keep an eye on it. Above 177 would signal a breakout higher. All right, thank you very much for viewing this video. Please come check out our chat. We post lots of charts and technical information. Everybody's super friendly. I've got it broken down into a bunch of different chats, and then I have the Osprey chat on there where I'm reposting all my plays, so it's really easy access to the information. And so, yeah, if you like the videos, I think you'll really like the chat, so please come check it out. Thank you. I'll post the link below the video.